Okay, good morning, everybody. Let's go ahead and get started. Let me know if you guys can hear my audio and see my screen in the chat box. Just give me a little Y or yes there, just to let me know that it is indeed working. Hope everybody's having a fantastic morning. Hopefully your weekend was awesome. Looking forward to our Monday morning together and getting back to our trading routine. Looks like we're up and running, so that's good. Also, just want to give a shout out to those that are new to the program. If you are new, let us know in the chat box. Just let us know what state or what country you're from so we can welcome you here. All right, guys, before we jump into our trading for today, as always, I need to remind you about the risks involved in this market. You can lose all or more than your initial investment if you're not careful. So please be aware of how many pips you're risking on each trade, in addition to how big your lot size is, and ultimately how that would affect your account if you were to lose money. So make sure that you're going through that process each and every time that you take a trade. All right, guys, so let's do COT report first, and we'll jump into the price action trades. Um, Last I checked, we were up a little bit, so not a ton, but like yeah, definitely a little bit. So let's go ahead and update that. Let me pull up my app here to see how much we're up by on these trades. Um, yeah, we are up, which is good. Um, okay, cool. Okay, awesome. So let me pull this up. So on the oh, this is funny. Um, okay, so I think I messed up on one of my accounts. I think I messed up the trailing stop. I'll have to, because one of them already closed. That's weird. I must have messed that one up. Anyway, so okay, so I'm at 183 .055 minus 183.495 times 100. Okay, so on the pound yen, I'm up 44 pips right now. And then on the pound dollar, I'm up 22 pips. Franc yen, I'm down actually 3. USD franc, I'm down 8. That's my worst trade right now. Excuse me. The euro yen is up 38. The euro dollar is up 13. So that's where we're at right now. Let's get a sum of all this. Okay, so that's where we're at right now. Is up 106 pips. Um, that's awesome. Cool. So yeah, we'll take it. We'll definitely take, a good start to the week. We'll definitely take that. And let's see what else. Any other comments about this? Which is cool because last week was a losing week. And last week we lost 200 pips, and we've already got more than half of that back. It's obviously pending. All these trades haven't closed yet. They're pending orders. So, are not pending orders, they're active orders that haven't really gone that far yet. Pound yen's only up 44 pips, pound dollar's up 22, euro yen's up 38. This is not a ton of pips yet, but it could turn out to be a good week. And we'll talk a little bit more. There's some things on the charts I want to show you guys with these pairs that I think you should see, just so you have a good expectation for the week. So we'll talk about that in conjunction when we do our price action trades. We might actually do that first on the charts and then do our price action trades. But yeah, so we'll take a good start to the week, but again, it's super duper early to the week. This could easily turn negative. This could easily turn into a massive winning week. I could actually make both scenarios. I see mostly profits for the week, which I'm excited about, and I'll share why. But I could also see a scenario where things could turn around. So, like I said, just trade like normal. Leave your trades open unless, of course, they hit their trailing stops or stop losses. But yes, it's important to leave everything going. All right, guys. So, and for those of you that are new to the COT report, this is like I know we've had a lot of new folks sign up recently, so this is how it's to be done. I send those trades out, you know, Saturday or early Sunday. You're gonna get them. You can't do anything with them until the market actually opens on Sunday, which is when the Sydney and Tokyo markets open. My recommendation is that you wait until 8 p.m. Eastern. So kind of if you don't live on the Eastern time zone, kind of do the math on figure out what 8 p.m. Eastern is for you. And I would say that's the earliest I'd want you to take these trades. And the reason why is that's when Tokyo's open and Sydney's open. So you got that overlap. The spreads are usually a little bit better. So you want to wait until 8 p.m. Eastern and then go ahead and take the trades. And really, any time after 8 p.m. Eastern is fine. You can wait a few hours. That's totally fine. But, if you take them around 9 or 10 p.m. Eastern, there's a good chance you're taking the same trades around, taking my trades, or you're taking your trades around the same times I'm taking mine. So, Darwin says 2 hours after Tokyo Open has been working great for me. That's fantastic. Yeah, I think that's pretty much exactly the same time I do it. So wonderful job there. Great work. And then yeah, for those of you that are new, that's the COT report routine. So there's obviously a little more work you have to do at the front side of the week. At the beginning, you have to take those trades and then you got to hold them all week long. And that actually is a lot of work too, especially if you're new to trades, like holding week long trades. Sometimes it's hard to like, for example, with the pound yen or even like this euro yen, if you were scalping and you had a trade that's up 38 pips or 44 pips, you'd be like, wow, that's a great scalp trade, right? Or like, that's an amazing scalp trade, right? For sure. But this is not a scalp trade, right? We're going to have massive pip wins and we're also going to have somewhat big losses as well relative to like a scalp trade. Okay, so with a scalp trade, it would be unfathomable to have a 100 pip loss. Well, we do that all the time with the COT report, right? But with the COT report, we also have 100 plus 200, 300 pip wins also all the time. Um, so, there's this balance between the two. So we prefer making a lot more pips. And as a result, we don't have the biggest contracts because they are swing trades, right? Like on my 200K account, most of my trades have like a one or two contracts, maybe max three contracts at most, is the most I'm trading on any given currency pair. Very rarely will I go above that many contracts because it's a swing trade, right? So that's the routine. So you're going to front load it, and then by Friday, whatever profitable trades you still have open and losing trades. If you still have losing trades on Friday, you're going to close those too. You want to be flat. What flat means is you have no open positions. You want to be flat by Friday afternoon, maybe late Friday morning. Basically, when we get together for this webinar on Fridays is when we close any trades. So during the week, as long as you've taken your trades correctly, there's nothing for you to do. You're done. Like you're just gonna hold those trades and do nothing the rest of the week, right? So very important to remember that and recognize that moving forward. Okay, guys. So cool. Let's jump over to this. Let's look at price action now. Okay, while we're here, we'll just look at this one. So this is awesome, right? This is a trade we took. Let's pull up the Telegram. So we took this trade. Guys, this is this is pretty dang good. We have to pat ourselves on the battle back a little bit because this is one of those really, really good trade setups, right? Um, let's see. Let me pull over Telegram real quick. So here's Telegram. Obviously, my most recent post was the COT report over the weekend right here. When did we post this Aussie Frank trade? Let's see. This was here it is right here. So this was on September 6th, which was Wednesday. So Wednesday morning, if you want to go back and see the analysis of which sometimes is really good. If you want to go back and see the analysis of when we took this trade and the reasons why we took this risk and where we placed our entry and the reasons behind that, that would be a good class to go back and watch, or at least maybe the last 30 minutes, 20 minutes when we actually took this trade. That could be some really good information. We'll recap that as well. But this was when we took the trade. And it has been on fire ever since. This is pretty awesome. So taking a look at it here, we entered right there in that yellow circle. Um, so a couple of reasons why did we take this trade last week? So we took this trade because um, we looked at sentiment, and on the sentiment index, we noticed that a lot of retail traders were flipping from their biased position, which was what most retail traders were buyers, right? And it was like to the tune of like 95%. 95% of retail traders were actually, it was more like back here where they were at 95%. And then when the market got over to here after this move to the downside and a little move back to the upside, they got down to like 90 or 85%. So you're starting to so what we saw is we saw a shift. We saw retail sentiment shifting from once a very, very long position, which was still very long, but now shifting to the other side. When you see that type of activity and you see retail traders starting to flip from one side to the other side, that can give you some massive intel into the propensity of the market going forward, right? So if they're shifting from 95%, and then when they got to here, we'll say 85%, 88%, something like that, long, that means they're starting to go short now because they went from a euphoric bias down to just biased. Okay. And I know they're still biased, but when you see that happen, that sometimes has more, that almost means more to the market than where the market currently is. So, if it's 88% long, that maybe means less as a signal than the shift. The shift itself can actually mean more. It doesn't always mean that, but yeah, it can mean more. So let's actually take a look at where it's at now. So do you guys know where to find this? This is on my FX book. You go to their sentiment outlook. They just call it their community outlook. Um, Usually once I get to this page, I have to remove an ad, but yeah, here it comes. There it is. I was waiting for it to show up. I'm just so used to it now. Okay, so let's find it. So here it is. Yeah. Okay, so it's at 83 now. Okay. So that's to be expected. Why is that expected? Well, because the market's now going up, right? As the market goes up, retail traders are going to get rid of long positions and they're going to start to sell. Okay. So they're transitioning away from their bias. So they were extremely they were 95 97% biased one way, and then they start flipping the other way. So I'm going to teach you guys some cool things too about the COT report in conjunction with our price action trades today. I think this week I'm going to schedule, yeah, I think I'm going to start scheduling that. Well, I'm trying to figure out, I want to get an idea of what the interest is with the sentiment strategy, guys, because I have two different ways that are very successful that you can use sentiment to pass prop firm challenges or just simply to find profitability in the market. For some of you, this may become your main strategy, but again, I do want to be careful because I don't really want people to navigate away from the COT report because it's just the good old COT report. It's that rock solid, like even though it has its weeks of losses, which by the way, everything does, newsflash, everything has its ups and downs. There's really no way around that. But uh anyway, what I'm trying to say is this, for some of you, this might become something more that's more aligned with your interests. But I don't want you to just the one thing I don't want you to do is if you're going to learn this and become skilled at this, I really don't want you to leave the COT report because we don't want to become what I call strategy hoppers, right? I was a strategy hopper for years, guys. The first 4 or 5 years I traded in the markets, I was just this big fat strategy hopper, right? And a lot of you guys can share that same experience, but maybe you don't have 5 years doing it. I mean, maybe you have less. I hopefully less because it was really annoying because I would see a flash in the pan on YouTube over here, somebody on Facebook over here telling me to do this or that. And I do have lots to offer, right? We got price action trades, sentiment, we've got the COT report. But that's just the thing. I'd love to teach you everything I know, but definitely if the COT report is your plan, your game plan, don't lose your game plan just because there's an exciting thing on the block. Okay. Um, there will be times where the COT report's going to outperform other strategies, and there's going to be other times where other strategies will outperform the COT report. It's just nice to have other different things that you can look at. I love that. I solemnly swear to continue the COT trades. Fantastic. That's exactly what I wanted to hear. Absolutely interested. Sign me up. High interest. Yes. Okay, good. Well, awesome, guys, because this is really, really cool. So anyway, back to what I was saying. So this is kind of what led us on. So when you get a currency, when you look at this index, okay, and you start to get, I know it doesn't say this anymore, but a week ago, the Aussie franc had interest at 95, 96, 97% long. When you get to a breaking point like that, uh, of I guess that long, typically, and this is not always the case, but at some point, if especially if you can find a supporting order block on a higher time frame, you're going to see a reversal. Okay, so the retail traders will eventually get it right. Okay, retail traders are usually wrong. We all know this, right? Usually these are bad traders, and we're trying to monitor their activities. Now, there always is a time, and the market does give this to the retail trader. At some point, the retail traders will, in fact, get it right. Okay. But it's usually after they've just got all sorts of blood on their hands and they've been margin called and mitigated losses and all sorts of stuff like that. Right. Um, so, but at some point, like I said, retail traders will give up their positions. And usually that will be surrounded by some kind of higher time frame order block in the direction that the retail traders want to go, which I'll explain in just a moment. But as I saw this transition, so when this market pulled back last week into this area, let's put it this way, it was more long. Let's say it was like 95% here. Let's just type that 97% 2 weeks ago. It was right here long. But then when the market got to here about the same price in this general area, it got down to we'll say I think it was like 88% is what I remember. Is what it was at right here. And they're about the same price. So what that means is you have retail traders, they went from super duper long to still really long, but they're transitioning and it's about the same price. So when I saw that, to me, that was a signal to say, okay, here we go. This is going to start to turn to the upside. Okay. Now, that's not the only thing we did. Okay. That is really, really cool. It's not super sophisticated, by the way. It's just, if you're paying attention to the most, you don't have to pay attention to every single currency pair. Just pay attention to the one or two or three, maybe max four on the outlook. Maybe just make a note, mental note, or put it on your side, with an actual post-it note, however works for you. Just like write a date down and say, okay, hey, these are as of today, this is where everything's at. Okay. You could even do it digitally, just put it on a spreadsheet or something, but you just shouldn't have to take too much time. Okay. I don't want you guys trying to make this too complicated. All we're saying is that they were pretty long over here, like an insane amount of longs to still pretty long, but we're transitioning. That's your signal to say, okay, how do we find buy entries? So now that we know that, what we did is we came in here and actually, if I do a rewind back to this point, I believe there were order blocks in here. So if you pull up this order block indicator, yep, right there. So there's a couple right in there. Let's see, I believe there's some other blocks. There's some down here. Smart Money's got some order blocks in here on the 1 hour. And if we let this continue, you'll see there's some order blocks in here. Boom, the market comes down, taps into those order blocks and quickly releases from that area, right? So that's what you're looking for is you want to find here, pause. Why is it still going? Okay, we'll stop it. Um, Stop. Okay. And then there we go. I got too much stuff on my charts. Let's go back. So let's turn off these order block indicators, right? So what you want to do is you want to find something that's pretty dang long and that transitions away from that. Okay. And then if you see that transition, now you're looking to go basically with the retail traders. That's your signal to finally go with them. Okay. So you don't want to go with them as the market's actually tanking. So if the market's actually, so back over here, this is actually, by the way, what caused them to go so long, right? If you come over here, it was just this perpetual, just stinking long downtrend, right? Of course, retail traders were just buying this, right? Because that's all this thing was doing for so long. It was just down, down, down for 2 or 3 months. It was just down, 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 down with very few moves to the upside. And so that's how you get a 97%. Okay. Long biased. Okay. And then when you start to see it come up again, you don't want to get in on the first rally because you don't, basically what I'm saying is if you wait for the first rally, um, you don't know when that's going to be, right? Like if you speculate too early, you could get caught in something like this where it's still coming down, right? So you do want to see somewhat of a substantive shift. In this case, it was about 9%. So we saw like a 9% shift in positions um, over the course of, let's see, this was Friday, August 23rd, and then this was September 5th, Tuesday. So you're looking at like 1 to 2 weeks later, 1.5 weeks later, and then that took place. That's how we knew, okay, it looks like it's time for this thing to start to rally up. And so now all you got to do is just find a good buy order block to take your entry and get a good risk to reward ratio. So that's a unique way. You're still trading price action. You're still looking for breaks of structure, all that kind of stuff like you saw right here. So if we come and zoom in here, you can see that um, we had a break of structure right around here, right? Market broke up. And so naturally there were order blocks trapped inside this area because the market had broken above this resistance. Okay. So now you're just looking for the market to pull back into that, coupled with the fact that they're transitioning. That's just like the recipe to make a perfect trade. Okay. So anyway, pretty cool. So at this point, guys, you can leave the trade. We got really close to hitting our target right here. You can leave it. I think I'm good to close this at this point. I mean, we got really, really close. We're up, 54 pips right now on this trade. Um, yeah, I'm good to close it. So I'm going to go ahead and do that. And then we'll look at some other setups. Here, I'm just going to reply back to that original post. Okay, awesome. There we go. So that trade's done, and we can move forward. Okay. All right, let's look at some of this other stuff. So I posted this trade on the this is the euro dollar. Okay, and actually this is what I wanted to do. I wanted to talk about how price action is going to affect our COT report trades this week. Okay, so let me give you some things to look at. So this is one of the trades we're in, not price action. Again, you guys all know this is a COT report trade. Okay, so a couple of things right now. So some things you guys should know about just the general marketplace right now. So there's this media consensus that the dollar is going to strengthen until the end of the year. Um, and it's not so much that the dollar is super strong right now. It's just more that there's a consensus that a lot of other currencies are weak against the US dollar. Um, but it's surprising though, because you get all these articles. I saw an article on MSNBC and CNN over the weekend. Both outlets were saying, and Fox, and just everybody, they're all saying the same thing, like, okay, dollar is strengthening, and we should see it continue to strengthen throughout the end of the year. And it's just kind of the general, economists expect this because rates are going to stay high. It looks like rates may even go a little higher. I can actually talk to you guys about why that's going to be the case. When you look at the bond yields right now, there's actually some patterns we can look at that suggest that rates are going to go higher. But that doesn't necessarily mean that the dollar is just going to strengthen for the rest of the year. And the reason why I feel so confident in saying that is, who do I trust more? Who do you get your information from, right? Do you trust CNN more, or do you trust the COT report more? Do you trust Fox more, or the actual COT report? I'm here to tell you, I'm going to trust the COT report because maybe CNN is right this week, but they're not going to be right in 3 months, right? The COT report's more likely to be correct over the next 2 to 3 months. So I might get a bad batch of COT trades, like last week was not what you wanted to see. We did have a couple of winners that helped, but I did have some flat out losers with the COT trades last week, and it was mostly because of the dollar. Like there was a significant rally to the US dollar last week. There really was, and there's no denying that. And I was in the wrong direction. We were in the wrong direction of that for the week. Okay. I got to make sure that's very, very clear. So yes, we're going to have bad batches of the COT report trades because sometimes we just get caught in a news cycle. But overall, I want to, and I would much rather follow the COT report because if the banks are obviously the banks are selling the dollar right now. We all know this, right? They've been continually selling the dollar for the last 3 or 4 weeks, and they continue to double down their position on selling the dollar. So what's that going to do to pairs like the euro dollar? If the banks continue to sell the dollar, what's the euro dollar going to do? You guys know this. It's going to go up, right? If the US dollar gets sold off by the banks, this is going to go up. That's exactly the opposite of what CNN is saying. Okay, CNN is saying this is going to go lower, okay? Um, the banks have a different mindset on this. You and I have a different mindset on this. In fact, on Friday we talked about this right here. So when you pull up the higher time frames, let's just use SonarLab for example. There is a plethora of order blocks just stashed away below. This is on an hourly time frame for those of you that want to follow along. So right here at 106, 105, just like look at the army of buy blocks, okay? It's just this is a wall you just don't break through, especially if the COT report is indicating that they're buying, that they're, excuse me, that they're selling dollars. If they're selling, and also at that, we also have evidence on the COT report that they're buying euros right now too. So, like, who's right here? Who's right about this? So I think CNN's right because about the current, like, okay, yes, they were right about the first part of September. The first part of September was a bad month for the euro, and it was a good month for a good week or two to the dollar. So they often comment and have commentary about the current happenings, right? So it's very important to know that that's how news is going. The news isn't going to come out and say like, "Oh, we postulate or we speculate that the dollar is going to actually go down." And plus, they don't want people to think that because, like, if the banks and the COT report are one and the same, uh, they don't want dumb money doing the same thing that they're doing, right? Um, so anyway, just something to think about is often news, like when you watch CNN Money in the morning or whatever, Squawk on the street or whatever you guys watch, they're often commenting about what's happening today. Um, they don't often comment or make too extreme comments about what's going to happen in a month or in 2 months or 3 months. It's just, okay, this morning Tesla's up 3% because that's what actually happened. I'm not saying it did. I'm just using that as an example, right? So over here, guys, I think it's important to recognize that we're starting to break structures on the euro dollar to the upside. Like this was a major win for the euro this morning right here. This structure point is huge, right? So on this hourly time frame, you have this really good resistant zone that if the banks were actually that interested in buying the dollar, you could bet your bottom dollar that this would have gone down. But that did not happen. What happened was the market came through here and it's still up here and broke through it. So so my expectation is we continue to see that follow through. Maybe we see some pullbacks. Um, it's possible we see some pullbacks and then a continued rally. But I think when you look at this, it's pretty darn clear there's a lot of buying activity here, and the evidence is starting to show. And the news events that were just posted, the news articles that were just posted Saturday and Friday are already beginning to be irrelevant and wrong, um, which is very interesting. Now, if you pull up something like this order block detector. Look at this. This is Lux Algo's order block detector on the hourly, guys. Look how many order blocks are stashed below here. So this is something I wanted you to be prepared for. So one thing I want you guys to watch this week is this. Now, I'm not saying the euro dollar is going to go just straight up from here, although it could. It definitely can. And we're positioned well for that if it does that. Now, one thing I want you guys to recognize is there is still a chance that the euro dollar could pull back and stop everybody out right here. Okay. So, my guess, we talked about this on Friday with the euro dollar. There's this apex low. What you want to bet people have their stop losses just right below that low. A lot do. A lot of people do have their stop losses right there. And guess what happens to be an order block, massive order blocks, tons of order blocks right here. And these are unsuspecting retail traders that have no idea that that the euro is it's just not going to go below this level, guys. It's just not. And again, disclaimer there, like anything could happen, but the likelihood of that happening is not. Okay, let's just put it that way. The likelihood is not very likely that it will go below this. Okay. When you have the banks selling dollars and buying euros, and you've got a massive order block zone right through here, this is a firewall that would be very hard. It would take a news event that we weren't aware of. Let's put it that way. Something that we weren't aware of for that to happen, which is why you still have to use a stop loss. You still have to protect your risk because that is a possibility. But I'm here to tell you guys that those articles you saw over the weekend, if you saw them, it's not, they're not true. Okay. They're true for last week, but they're not true about next week or in a month from now. They're not true about 2 months from now. Okay. Because the information that we have from the COT report and the information when you look at the chart tells a totally different story. Okay. So, but like I said, be careful though, because we could see this euro dollar still come down to here, which is quite far away. Like you guys could see drawdowns like on your trades, depending on where you got in. From the current price, I could see a scenario where this comes down 70 pips, 60 pips, and then just it'll be very quick. It'll be over with very quickly, and you'll see a large move back to the upside. Okay, so that's what you should expect on the euro dollar. There's a lot of currency pairs like this right now. This is not the only one. So if you go and look, we won't look at all of them because I want to move on. But if you look at things like the pound dollar, it's a very similar story. This has been like again, look at this. Um, Here is huge resistance right here. We broke through that this morning. This is a huge win for the pound dollar. That's a huge win, just that right there. Okay, perfect little double bottom right here. Right? I'm not going to draw it out. It's going to take too much time, but yeah, you can see that that looks pretty good. Okay, so what else do we need to show you guys? Okay, oh yeah, and I guess let me show you some other examples of some things like if you look at the pound yen, this has the potential to um here, let's get this to load up here. There we go. There are some order blocks on the pound yen and the franc yen and on the euro yen that are a little bit lower than my comfort, I guess I would say. Like when you pull up some of these indicators, um, on this hourly chart, there's really not a ton of order block pressure until down here. So that it could be a little bit concerning for some of those yen pairs. Okay, so it could be a little bit ways away. Um, um, and then you have I mean, let's look at some other time frames though. There might be other order blocks we're missing. Yeah, most of these order blocks are down here. There are a few right here that are doing well, so I'll give the market some credit. Yeah, you can see those stashed right here. So we could, I mean, who knows? Maybe it doesn't come all the way down to here. That maybe I'm being a little too cautious. But I just wanted to let you know that there are some pairs that are still at risk of, like the pound yen is a little bit on my somewhat worry list. Um, but it's not like I'm going to exit the trade because of it. I hope that makes sense. As long as you use your lot size calculator correctly, the worst thing that could happen to you is you lose the 0.75% on that one trade. If you're using just a fixed contract size because you didn't want to go through that process, then I would be worried for you. Okay. Um, so it is so important that you use the lot size calculator. Like you guys, like there's no excuse for that. You have to use one. Okay. Um, and I will go as far as to say is you will quit trading the COT report someday if you don't finally use the lot size calculator. You will probably quit. Okay. Just because there will come a time where you're gonna have a loss that's just so bad. Like we're just gonna get it so wrong that if you didn't use a lot size calculator, it's just gonna be like, why am I even trading the COT report? And that will happen. And we're gonna continue to trade it. But that's why I'm saying, like, I don't want you to be left behind if you're not using one. So if you didn't use one or you haven't used one before and you've done okay, that's all right. But now you got to change. In fact, if you didn't even use one this week, I would probably close your trades and then re-enter them doing it the right way with a lot size calculator, just because you can't afford if some of these trades were to go to their stop losses and you didn't use a lot size calculator, you could blow up your account, right? That's a risk that's possible. So you have to use one. My favorite one is with MyFX Book. It's super simple. It's just if you just search lot size calculator MyFX Book on Google, it's just this first option here. I'll put it in the chat box. It's super easy, which by the way, guys, we have a basic training this afternoon. I had a few requests come in. I'm willing to take some more requests because I don't think it'll take too long. But for basic training today, which is in a couple of hours, um, I want to show you guys how to use a trailing stop. And I'm also going to show you how to use the lot size calculator correctly. So, and if you guys have other things you want me to talk about, send those in the chat box now or email them to me so that I can prepare. I have like an hour to prepare that. Um, if you have something else you want me to talk about. But that's what we're going to do today for sure, is we're going to talk about trailing stops. I'm going to actually demo how I set up a trailing stop in MT4. I'm going to demo how to use the lot size calculator correctly, depending on the risk that you're taking. I'm going to show you how to scale your account, go through that process, and kind of have a conversation with you about what kind of questions you should ask about your risk management. For example, if you're kind of a risky guy and you don't need, and you're not doing like a prop firm challenge and you've got your own money, you might be able to afford to risk more per trade. So we can have that conversation together in that webinar. So that could be pretty good. Okay. Okay, so but yeah, so COT trades, like, and there's nothing you can do, guys. Like I'm not going to change the COT report just because there's like a couple of trades that look really, really good, and there's a couple of others that don't look so good this week. That doesn't change what we do. Okay, one of the things that makes the COT report so cool is that it is just this, it's a rock. Okay, it's an impenetrable rock. Like this is the strategy, and we don't change it unless we get some substantial evidence that suggests otherwise, that we should do it differently. Until that happens, it is very much we don't change what we do. Okay. All right, guys. So what else? What other price action trades do we have that we need to discuss here? Um, I think I was just gonna go look for some more setups. I'm still leaving, by the way, this euro dollar open. It's a pending order we posted on Friday. It may not ever trigger, but we will see. I'm not totally convinced yet that this euro dollar is out of the woods as far as getting to the upside. We definitely could see this pullback. Um, like I said, 60 pips. And then once it's done pulling back into this order block, I think that's when you'll see your massive move to the upside. That may not ever happen, but I'm prepared for it, and I want you to be prepared for it. So your COT trade will suffer, your drawdown will suffer on the COT trade, but overall you will prevail with that. You should prevail with that position. Just want to make sure it's very clear. Let me just look at questions here. So um, Brooke says, just heads up to anyone looking at challenges. Bespoke is currently running a 22.5. Yeah, you told me this. This is awesome. 22.5% discount, 85% profit split, 140% refund once you're funded. Use code funded. Currently, I was 100% that was going on to sign up with FTMO yesterday, but it made it a hard push. 8% phase one, 5% phase two. That's awesome. Yeah, that's cool. Um, I would say, yeah, Bespoke's good. I have a challenge account with Bespoke, and they've been good so far. Again, I'm not funded with Bespoke though, so I couldn't tell you that way. But well, everybody I've talked to has pretty good reviews about Bespoke. So I didn't see them on the red list with CFTC either. So, but definitely do your own due diligence, guys. But thank you for sharing, Brooks. That's fantastic news. Um, John says, Steve, would you suspend the stop loss on the euro dollar for our caught trades? No. Um, yeah, it's a great setup, and we're gonna get this right, but we're definitely gonna win on the euro dollar. But again, there could be a roller coaster, and I think that's what you're alluding to is the fact that there could be some volatility with the euro dollar. So maybe, so since we know that we've got a pretty good edge on the euro dollar, shouldn't we just suspend the stop loss? I think I see that logic. The problem is that I just don't, I always trade with the stop loss. You don't know if something, we don't know if something will happen to the euro. There could be a flash crash. There could be something crazy that happens in the marketplace that is unforeseen, that's not part of the current analysis. There could be something that happens to the dollar on a fly. There could be something that happens to the euro, and we just want to protect ourselves against, against something that's not expected, right? Okay. Um, so yeah, definitely, I definitely keep it on. It's already a pretty loose stop loss. I mean, it's a pretty, I mean, what did we use this week? It was 88 pips. You should be fine with that. See, Darwin says, my question is, how is it different for trading currency index versus caught trades? Example, pound yen, BXY, JXY index. I see. Um, I don't know exactly what you're saying, Darwin. And I don't think I know enough to be able to answer the question adequately. But yeah, that the dollar index that we have on the COT report is the closest thing I can get to just flat fiat, you know, USD currency. So that's what we go off of. Yes, exactly. Yeah, if we do end up stopping out on the COT trade on the euro dollar, which for now doesn't look like it will happen, but it could by Friday. Yeah, we let it lose. Yeah. Yeah. And what will probably happen is if we lose, there's probably a good chance that we'll get another batch of signals this weekend, and it will most likely include the euro dollar long position yet again. That's very, very common, right? All right, guys, let's see. I want to see if we can find I do want to see if I can find a setup here that's in addition to some of our other trades. We do have some good trades going. So I don't want to get too aggressive about forcing trades, but if we find something we really like, then let's definitely go for it. Um, right now, there's not a lot of, if you guys look on the index here, there's not a lot of extremely biased currencies because a lot of them have already pulled away. Like, for example, the CAD franc's pulled away. It used to be up in the 90s. Now it's only 80s. The Aussie franc, as you know, has pulled away. The NZD franc, where's that? That was really biased, and I believe it has pulled away as well. There it is. Yeah, it's 71 now. Right. And I don't see anything else here that's up in the 90s. So I would like to see something in the 90s to get me excited um about going in the other direction. So I'm not sure I'm going to use that version of the strategy where you're looking to go in the direction of I'm not looking to go in the direction of the retail traders. Once retail traders get to a breaking point, then I'm willing to go with them. But when they're, in the 60s, 70s, and 80s, usually that's a sign to go against retail traders. Okay, I hope that makes sense. So you want to go against them when they're, 60s, 70s, and 80s biased. But then when they start to get up into that close to full-fledged, like we're all going this way, they actually end up getting it right. Um, Not all the time, but yeah, that's just generally what you'll see. So I'm probably just going to rely on my price action skills mostly, just because I'm not going to have a lot of, there's not like a solid sentiment setup at the moment. So we'll just look for more price action trades. What's the difference between dollar index for COT report versus DXY? So the biggest difference is just that the dollar index on the COT report has more to do with holdings uh, on the Chicago Mercantile Exchange as far as the leverage funds category goes. And the DXY has more to do just with the price of the dollar. Like it's a pricing tool, right? Prices out the dollar. But it doesn't really tell the DXY is not going to tell you um, too much about what institutions are doing with the DXY or what their plans are necessarily. I mean, it might tell you what the price of the dollar is doing, but it's not going to tell you what their plans are. That's what's cool about the COT report is the COT report tells us, hey, this is what the banks are going to do in a month. We know that they're going to sell the dollar, or in 2 months, they're going to sell the dollar. And there's going to be some substantial weeks where you're going to want to be aligned that way with the COT report. Could be this week, could be next week. There could be many weeks where we get that right. There's going to be a few weeks where we get it wrong, like last week, but we want to stay aligned with them as much as we can, right? All right, guys. So let's get. I hope that makes sense. Um, oh yeah, and Brooke says so. For example, you'd short the NZD franc until you see more bias in the other direction. Yeah. So right now, I would look for sells on the NZ franc and Aussie franc at this point. Yep, yep, yep. I would look for sells now, and I'd look for sells on the CAD franc. Yep, as far as sentiment goes. And then I would be definitely on the lookout for the next currency pair or couple of pairs to get up into that 90% area. If you start to see them get up into there, uh look for reversals. And how are you going to do that? You're going to look for order blocks in the hourly or 2 hour time frame that match those reversals. Okay. And usually once something gets to a breaking point like that, those order blocks light up, man. Like they are some of the best order blocks you'll ever use. Um, but it's only once you get an index, a sentiment index that's at a breaking point like that. That's when those order blocks just become something else, right? And the probability just goes through the roof. Yep, that's a great question. All right, guys. So we're continuing on here. I know I spent a lot of time talking about other stuff. I hope this information's been helpful though. And I might, if I find setups this afternoon, I've got some time. I've only got a few one-on-one scheduled this afternoon. So if I've got time, I'll look for some more setups that I can find on my own. Oh, I need to get back to that hourly chart. That's what I like to use. Okay, yeah. So something like this is pretty good. So like when you look, this is kind of what I like to see. So this is the Aussie dollar. Look at this, guy. So you have these series of higher lows right here. This is actually pretty good. It does not really a trend, but series of higher lows here after this major move to the downside. Okay. You've got a couple of higher highs, and then you get this really uh, you get this really substantial break in structure right here. And that's very, very robust. Okay. You don't create those types of moves unless you're a bank or something like that, right? That's retail traders can't make moves like that. So that's definitely them pushing the market this direction at the moment. So, and we also know that again, the banks are trying to sell dollars. So if they're going to sell dollars, what's this pair going to do? Probably go up, right? If they're going to sell dollars. So where are order blocks? Well, I suspect there's some order blocks right in this area. I also suspect that there's some good entries down in here. And when we pull up the indicators, let's see if that says what we're talking about. So yeah, down here, there's a couple. Let's just try smart money. Smart money's got them all right here. Let's try this order block detector. Okay, there is one right there, they're saying. But these would be kind of your areas that you'd want to be looking for entries. Um, Here, let's actually let's go back to that. Let's extend this out a little bit more. Um, oh yeah, this is good. This is really good. So this was a liquidity sweep right here. So notice how this was an apex low and the market came just beneath that apex low, wiped out everybody's stop loss on that move, and then created this. That was just the banks sweeping liquidity because you know they want to send it higher. So they just swept everybody's order on that liquidity move. And now, yeah, so basically you want to look for dip buys now. We have the green light to find dip buys on this Aussie dollar. Okay. Now that the liquidity's been swept, we're looking for dip buys. Okay. With some pretty high level of confidence behind it. So I'm going to actually switch just real quickly to a 15-minute. I want to see if there's order blocks on the 15-minute we could use on this because I'd love to buy into this if we could find a solid entry. And it's similar to the other one, the other currency pairs. And maybe we do wait for this to drop a little bit deeper. But so there, I mean, yeah, there's a couple of areas like definitely here or here, there could be a little bit of a buy, but it just does seem like most of this liquidity is in here. So we may want to just wait for it to dip into there. Plus, we do think that's a possibility. The euro dollar might do the same thing. It might actually dip somewhat significantly before this thing moves up again, but you don't want to be looking for sells, guys. This is not a good pair to be selling. Um, why would you? Like, tell me why. Make an argument why. Because I mean, there's always an argument, right? But I just think the argument to buy is just so much more strong than there is to sell this right now. Um, got report and all, right? Let's try a 2 hour. I want to see what the order blocks look like out here. Okay, that whole thing's an order block, it says. This whole thing is. Um, and then yep, that's kind of what I thought, that thing right there. And then smart money, yeah, whole area. So basically from here all the way down to here is an order block on the 2 hour. Well, it's many. There's like 10 order blocks right there on the 2 hour. So we could do that. This is a very high probability setup. If we could get a pullback into this, we could ride this up quite a ways. So what would the trade look like? Like what would we do with this trade? So what we would do is we would, if you wanted to encapsulate this whole area, because we don't know exactly where this is going to come and pause, we know that this is a pretty good buy with a high likelihood of working out. Um, Especially with that's a little bit of a bigger stop loss, but how far could we take this? You know, how far could this actually go? Well, there was a lot of liquidity up in this area. It looks like it's been tapped into largely. You'd think that the market's going to go beyond that, especially now that it's swept all this liquidity down here. It go beyond that. This is a trade you'd have to hold for a while though, guys. This is a true swing trade. Okay, so yeah, you're looking at 1 to 3, 1 to 3.5 with that. I think that's worth taking. I definitely think it is, but this is going to take you a week well, it could trigger right away. Like you could see that trigger today or in a couple of days. Um, and then it could take you a week to get to there, right? But that's the type of trading I like. I like that type of thing because it's more in line with what I think the banks are trying to do. It's more in line with the COT report. It's more in line with, all my analysis. So I'm down to take this, and I'd say I got to hurry because I do want to wrap up and try to keep a good time. So let's post this trade. I like this. This is exactly. I didn't even have to look at very many setups, guys. You don't have to look at every single currency pair. If you like what you see, and it's a setup you would take and it matches what you would do, then there's nothing wrong with just taking that trade and moving on. Okay. You don't have to look at like there's 19,000 stocks out there. You don't need to look at every single stock to know that you want to buy one or sell another. There's 28 different currency pairs. You don't need to look at all 28 to make a decision. In fact, some people just have their top, three or two favorite currency pairs to trade, right? There's nothing wrong with that. Okay. Okay, here we go. Yeah, there's nothing wrong with just focusing in on what you're doing. And for me, it's just a matter of, okay, I found what I like. This is a setup. This is good. Um, let's go ahead and take that trade now. Okay, so I'm just putting together that signal so we can post and end on time. Like I said, for those of you that missed it earlier, we will be doing basic training this afternoon. That will be in 2 hours at 2 p.m. Eastern. It's on the calendar. By the way, that's my project for today is making sure the calendar matches your time zone. So I'm going to try to figure out how to do that again. Um, because I know it doesn't match everybody's, when you go on there, it may not match your time zone. So that's something I'm working on. Okay. 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 This is a long position. This is a buy limit, so we're going to wait for it to dip first. And we're going to wait for the market to get to 0.64039. And we're going to take our profits at 0.65658. And we're going to stop out if it goes down to 0.63574. Okay. That looks good. 39. Okay, awesome. Well, that looks pretty good, guys. Any other questions before we wrap up here? I like this. I think we've got a good game plan for the week. So, and be patient with the cot trades, guys. I know they were up this morning. They could go, I could see a scenario where half of them go big time in our favor, the other half maybe not. I could see a scenario where all of them work out. I could even see a scenario where all of them do lose this week. But usually when that happens, there's following weeks that will, like, you'll just win a ton. You'll have some pretty big winning weeks. Usually the worst weeks are associated with some of the best weeks as well that are coming. So just know that when you're trading the COT report. So, all right, guys. Well, thanks for your attendance today, and we'll see you guys in basic training in a little bit. And if I don't see you there, enjoy the rest of your day, and we'll see you guys in the next webinar. Thanks for coming.